All right, let's get some more reaction and break it down with Matthew Dolgin, senior equity analyst at Morningstar. Thanks for joining us today. Let's talk about the personal guarantee from Mr. Ellison. Do you think it's going to make a difference to Warner Brothers? As I was saying, it kind of looks like Warner Brothers is looking for an out because they want to go with Netflix.
I agree with you completely. The Warner Brothers board was looking at multiple reasons why they said they didn't want shareholders to approve the Paramount deal. So no, we don't think that today's developments will change how Warner's board is looking at things at all. Your reporter, Molly, was exactly correct. Right now, this is in the hands of shareholders. And so we doubt that today's developments really make a big difference to their decision either, but it could at the margins. And so right now, it's up to the Warner shareholders to decide whether they want the Paramount offer for $30 a share, which they can vote on directly, or to not tender their shares and wait to vote on the Netflix offer later. And really, that's the only thing that we think today's news will influence. We don't think that we're going to see any revision from the Warner board on what they recommend based on the standing Paramount offer right now.
Okay, can you give us just the broad strokes on the offers as they compare? Because when you look at them, we know Netflix has a lower offer, but they don't want to take the cable TV stations. So it's hard to sort of compare them just on what we see.
That's absolutely right. These are not apples to apples offers, and therefore it's not such an easy decision or an objective decision to compare them. And so when we hear about Paramount's grumbling that Warner didn't accept the best offer, that's really at this point up for debate and in the eyes of the beholder. And we think there's no way that the board, Warner's board, could be considered deficient in choosing what they did. As far as the offers, Paramount's is pretty simple. They're offering $30 per share in cash for the entire company. So Warner shareholders will just collect $30 and be finished. They take their cash and they have no remaining stake in the company or any of the company's assets. And one of the questions supposedly from the Warner's board was how good that money is, how firm the deal is. And that's what today's revision from the Ellisons maybe cements a little bit more, that yes, this is money good. Should the deal get approved, you get this $30. Netflix is different, of course. You mentioned they don't want the entire company. So their offer was for $27.75, but leaving shareholders the remaining global networks, the linear networks, which, you know, value estimates can vary. We think they're worth about $3 a share. However, there's going to be a lot of debt on that remaining company, and it's linear television network, so it's a business in decline. There could be risk there. The other part of it, the $27.75 that Netflix is offering for the streaming and studios business that they want to merge with, $23.25 is in cash. The other $4.50 is not certain to be $4.50. It's based on Netflix's stock price, and if Netflix's stock price is below about $98, it's going to be worth less than $4.50 and worth less and less the lower Netflix's stock price goes. If it happens to be that Netflix's stock price is above like almost 120, they'll actually get more than $4.50 a share, and this is around the time of closing. But they'll have remaining stake in Netflix, and it's not certain exactly how much that'll be worth when the deal goes through, if they do approve the Netflix offer.
Yeah, so many moving parts, as you mentioned. All right, which one actually faces fewer regulatory hurdles in the U.S.?
Well, we're looking at that in two different ways. On the merits, we don't think it's necessarily clear-cut who should have fewer regulatory hurdles. You mentioned about in the U.S., they've got different things that would be the potential hangups. For Netflix, of course, it's the multiple very large subscription streaming platforms. And so if you're looking at the size of the subscriber base, it would be huge. We think there's a good argument that's not the way it should be looked at, and that ultimately the deal will get through. Paramount has different issues. They've got two of the remaining 5 biggest studios in the world. They've also got the linear networks, which is probably less of an issue given that that business is in decline. They'd probably get through too, but to us, the big wild card is how tough is the challenge, not necessarily on the merits, and that's where the relationships come in. It's been widely assumed that the Ellisons have a better relationship and would have an easier path with the federal government in the U.S. Now, the federal government doesn't have the absolute final say. They can't unilaterally reject or accept, but they can choose to not bring a lawsuit, not push back against it. And we think that's probably right, that the administration, that the Ellisons would have a better chance with the administration, and that there would be more pushback against Netflix, and Netflix would maybe have a more difficult, a challenging time getting it through. And for that reason, we think the Paramount offer is probably a little bit more attractive for the Warner shareholders.
Okay. Do you think Netflix will come back with a counteroffer, and has a date yet been set for a shareholder vote?
So at this point, we don't expect Netflix to revise its offer. The shareholders have now until January 21st to vote on the Paramount offer that's currently standing, and Paramount can extend that. We don't expect a vote on the Netflix offer until the second quarter. So Paramount probably has the first quarter to itself. It can see if it's receiving the shares that it needs, and if not, it may increase its own offer. And that's when we think it might be more likely that Netflix comes back. We think it would be a mistake if Netflix does. And they may decide it's just not worth it at that point. They can take the cash that they get for Paramount ending up rejecting its offer and going someone else. But it's possible. Like I said, I don't think that'll happen unless and until Paramount increases its offer above 30. But you never know. Netflix has been more interested than we thought they'd be, and so I wouldn't take it to the bank. Every day is potentially newsworthy.
Every day could be a gift that keeps giving. All right, Matthew Dolgin, thanks for joining us. Appreciate it.
Thanks so much.